This is going to be the most fun talk about AI insurance any of you have ever heard in your life, I promise. I'm joined by the co-founder and CEO of Corgi Insurance, Nico Laqua. Nico is also a co-owner of a office Corgi in their office because they work 7 days a week and they have an office dog, which I think is both cool and a lot of pressure to look after this living animal. Nico, you came up with this idea at YC with your co-founder Emily, right? So why don't you talk about the origins of Corgi, kind of. One thing that I'm obviously very curious about is if the dog predates the company or if the company is named after the dog.
Yeah, so the dog came after the company actually, our dog Trudy, but we have a dog rule, so all of our business lines are named after different breeds of dogs, and when we reach 100 million in revenue, in each of them we will get a dog of that breed.
There's gonna be like a whole pack of dogs running the offices. Okay,
yeah,
great.
each kind of department will have their own dog, hopefully. But yeah, I mean, we started because insurance is a pretty big problem, and it's maybe not the most exciting thing for most people, but it's 12% of the GDP, so about twice as big of a market category as software. And insurance is one of kind of the primitives of any financial economy. It predates banking or money itself. It's like just a very, very important part of conducting commerce. And like what's really unique about insurance, if you compare it to other areas of financial services, is kind of the way that the data primitives work. So if you kind of look at the history of fintech, modern fintech kind of begins with payment processing. Then we saw a lot of really great banking companies, and then after that, in 2019 or so, a lot of really great expense management credit card companies. Insurance is a little different. So to start, insurance is bigger than payment processing, banking, and credit cards combined as a market category. But more importantly, the way that like payment processing, banking, and credit cards work is that there's a general ledger that processes a lot of transactions very quickly. And those transactions tend to be numbers, and kind of interpreting and working with numbers very fast is very important to the way that their technology works. In insurance, the product that we sell is called a policy, and it's a 100-page long contract consisting of natural language, of English. And kind of the work that an insurance company does is turning that natural language contract into math, which turns out to be like a pretty difficult problem to do with computers. So it's not something that computers have really ever done before in a comprehensive way. So the way that insurance companies have worked for the past 3,000 or so years is that normally as a function of revenue, as you get more revenue, more customers, you hire more people in order to interpret these contracts, in order to do the risk assessment, in order to provide the pooling of risk that is insurance. So we kind of honed in on the fact that like, hey, like this is like the biggest words-based industry at a time when computers are getting quite good at using language, or at least the type of language found within these policies. And at first, our intention was to work with insurance companies to try to kind of improve their operations and bring in agentic workflows and kind of bring them into the modern world. Very quickly, we kind of learned that that was a pretty difficult thing to do. And we also kind of took a step back and saw that like there's more than 20 insurance companies around the world that I can name off the top of my head that are worth more than $100 billion on public markets. So these are some of the bigger companies in the world. And figured it would be a lot more exciting and make a lot more impact to actually just go for labor replacement very directly and become the full stack insurance provider. So that's what we ended up doing. And during YC, we actually pivoted to become the insurance company from kind of servicing them instead.
So you went more vertical, but was insurance something that you would have expected you were going to be building a company in, or was it like just the size of the market and the opportunity that got you excited? Like, would younger you have been like, hell yeah, I'm running an insurance company?
Yeah, if it was my first company, I definitely wouldn't have jumped at insurance. I guess like I was always kind of exposed to it a little bit. My dad, his whole career, he worked for USAA, which is a pretty big insurance carrier. He was a lawyer there. So like I always just viewed it as this kind of like super outdated thing. And something that really sticks with me is when I was in high school, I was trying to show him something on my computer one time. And normal people like type on a computer with a normal posture or whatnot. And he was kind of hunting and pecking. And I was like, what are you doing? Like, why are you using a computer like that? And he's like, oh, I work in insurance. You think we use computers? Like, haha, like that's like something to be proud of. And I think it's just like was kind of the quintessential kind of like really old school industry. Um, it wasn't something that like I saw a lot of opportunity to do until large language models got pretty good. And I think when ChatGPT 3.5 came out, that really made me kind of like reassess what I was doing with my time. At the time, I was running a gaming company, and I kind of just like wanted to do the most ambitious thing possible, and I figured that like really meaningfully changing the biggest words-based industry at a time when computers were getting quite good at using language would be a pretty meaningful challenge and could create a really big outcome. And I always admired kind of the previous generations of financial services companies, like particularly Stripe, Column, Brex, and Ramp. I think were all really great companies and still are. And like I just think insurance is kind of a bigger opportunity. And by yeah, so I think it was more of a sector bet than any like particular like unique insight at first. It took us a while until we kind of developed what we ended up doing.
So here, who here is familiar with 996 culture? Raise your hand. Most people. What about 997 or like 1237 or whatever the heck you guys are doing at Corgi? Like they have an open role for a 7-day a week chef because they are going to be, I guess, eating every meal every day
Yeah.
of the week in the office. Is that right, Nico?
Yeah, I'm quite happy that 996 is getting trendy now. We've been just kind of working 7-day weeks for the past 2 years or so, and I've been doing it for the past going on 7 now. I think like if you're gonna do something, you should do it right. And we hire a lot of ex-founders, so we work 7 days a week. And when we hire people, we get them a mattress for the office. I personally live in the office. Yeah, I think our team's very bought in. About 20 of our team members
Is
have.
there a shower in the office?
There's not, but we're right down the street from a gym where I shower.
So this gym has become part of the office. They just don't necessarily know it.
Yeah. It's definitely very important for my quality of life. But yeah, I don't know. I mean, like 20 of our team members have Corgi tattoos, right? I think we're just like very different than a lot of companies and kind of the level of intensity that we have.
So what motivates a entrepreneur to join someone else's idea and company and get so passionate that they would sleep on a bunk bed in the office and get a tattoo of the company, somewhere on their body? Like, how do you get people so passionate to work for you?
I think like something I really have a lot of problems with, and we're kind of, I think, big ambassadors of kind of, we call it being a hardcore startup. Like, that's something that I think is important because if you're going to do something, you do it right. And I think kind of the opposite of that is kind of the lean startup model, where like you make a product, like normally a vertical SaaS or vertical agent product. You make it once, you kind of iteratively improve it, and hire a bajillion salespeople to sell it across a vertical. I think that that's kind of just like uninteresting, but it definitely produces fine outcomes. And not to
What
knock.
makes it uninteresting? Because I'm also speaking later today with the CEO of Gamma,
Hmm?
who's kind of the polar opposite. Like he cares about how he reached 50 million in ARR with like a very small head count, and like they really track like ARR per employee and stuff like that.
Mhm.
And he wants to be profitable at all times. So like, why is that less exciting to you guys?
I think kind of a core part of our culture is that like every couple of months, not every day, otherwise we would get nothing done, but every couple of months we kind of take a step back and kind of think like, what's the most ambitious thing I could be doing with my time? And I encourage everyone on the team to do that too. And it better be working at Corgi, because like I want us to kind of reorient ourselves around whatever is the most ambitious version of what we're doing. And that doesn't necessarily mean it's the safest path. Like sometimes you kind of need to burn the ships and you need to take some risks, and that's okay, as long as the risks don't like endanger the whole company. But I don't know. I mean, my last company was a profitable company, and we did that thing. But I think that like life for now is pretty short, and it's worth doing something like that's like extremely meaningful and just is kind of the biggest possible thing you can think of. And I think in our case, like building kind of an AI native financial infrastructure company, a new type of financial services company, is something that's like pretty interesting and pretty exciting. And like I don't think that's going to be done if we're like worried about our revenue per employee instead of just like doing something that's like really big and could result in like $100 billion company.
Is are people basically signing up with the idea that like this is a intense tour of duty where like they grind like crazy for a couple years and then maybe they actually get an apartment and don't live in the office at that point, or like what do you think people are signing up for like right now?
I think they're signing up for low pay, for danger, and for a lot of work. But
Why?
you know, sometimes people want to like march under the flag of luxury and not working that hard. But sometimes people want to do something that's like really meaningful with their lives and make something that's really big and do something that they're proud of. And in the end, you know, I think with everyone's equity, they'll end up a lot richer than they would be if they got, you know, a normal job.
So do you think there's something to like for any founders in the room or investors who work with founders, like there's an incentivization where people feel more buy-in that they should grind like they own the company? Because I think, you know, we've seen somewhere in Silicon Valley some jadedness where people are like, you know what, only really the founders and VCs will make money from an outcome. Like the average employee's equity is never going to go anywhere. Is there a different feeling at Corgi? And if so, like how did you cultivate that?
I mean, our employees invested like, you know, $1.5 million into the company, right? Like pretty early on. So I think in our case, like if someone works at Corgi, I want them to literally be an owner of the company. I think equity is really important, and I think that shortchanging people on equity is a really bad thing. Um, and like, I don't know, I'm not a fan of like top-down hierarchies, like setting all of the norms and regulations. The way I think of our company at least, and maybe it's different for others, is that I think a sense of community and belonging is important. Like um, people like will have lots of friends and belonging no matter where they go. Humans are social animals, and I think that like if you're spending a lot of time at work, whether it's a 9 to 5 or whether it's in our case 7 days a week for very long hours, I think that like enjoying the people that you're around and kind of having a merger of your personal life and your work life is something that like can produce really great results over some duration of time. For some people, I think that's like, you know, a very great long-term fit. For others, maybe, you know, after 4 or 5 years, they'll retire or start a company of their own or whatnot. And I'm sure a lot
Would
of
that
that
be a
will.
hope if you have a lot of like former founders as employees?
Mhm.
Would you be happy? Like, would it be a win for you if there's like a Corgi alumni network who start a bunch of companies after Corgi?
Yeah, I think that that'd be good, and certainly like is part of my duty to people who were good to me for a number of years to be good to them and make sure that those can be off to a great start. Um, I think it's like a within reason things. Like with Corgi, our mission is still pretty early on. I think we're not a success until we ring the IPO bell. But like if people reflected on what they're spending their time on, and Corgi wasn't the most ambitious possible thing, and there wasn't a good mechanism for them to change that, then like they should probably be doing something else.
Now, you guys have alluded to being one of the faster growing startups right now in San Francisco, but not shared maybe as many specifics. Is that because the moat here is sort of like the vertical stack that you put together, or is there like a tech moat that you don't like? Like, I'm curious, given how easy it is to start a company now,
Mhm.
probably the easiest it's ever been in history. Where does Corgi kind of keep lasting differentiation?
Yeah, so for us to even begin operating, we spent about a year and a half doing some pretty complicated regulatory work. We're among the most regulated entities that exist in the U.S., like even more regulated than banking. So that's, you know, part of it. The other thing is we spent that year and a half doing like quite a lot of automation work, like along every layer of the regulatory stack, because we made the decision to become the insurance company rather than to service existing insurance companies. So it's not to say that like we're unafraid of competitors or whatnot. I mean, we keep a very low profile on purpose for good reason. But like for someone to compete with us, I think it would, you know, cost them at minimum maybe 50, $100 million, and it would take them like 6 to 12 months minimum to begin operation. Maybe, if you copy someone, it's always a little cheaper and a little quicker than the original. But like for now, I think we're kind of in a situation where gaining market share before there's like many competitors is pretty important. There's some good case studies on this. I think Stripe did a great job. In Brex's case, I think it could have been a little better. Obviously, Ramp came out and is now, by many metrics, doing a bit better than Brex. And I always say we're not quite in the business of getting ramped. So yeah.
That's a new verb for me. You don't want to get ramped. Okay. That's really interesting. Do you think there are other verticals like insurance where your approach will prove obvious or correct? And like, would you invest in those startups?
Yeah, I think that like people used to call it like growth buyouts. They don't use that term anymore. Now YC uses the term full stack AI companies. That's the current term. But I think that the idea is like instead of selling to like a vertical and trying to get all of the companies on board, you build that vertical. And like I think for any particularly for highly regulated industries or industries that consist of a lot of like pretty complicated workflows and already have service type businesses with lots of employees built around them, that's kind of the future of the way that AI companies look. And I just think there's a lot more value that can be captured there. And like you can kind of see echoes of that in the past startups that we think are really attractive. Like maybe Uber could have built a really great business like selling like vertical SaaS software to all of the taxis, right? And maybe it wouldn't even be that dissimilar in size early on. Maybe it would even grow faster than Uber ended up growing. But Uber ended up being a much more important company because they became the taxi company.
Aren't they now the food delivery wannabe company?
Yeah, I mean, yeah, I think that has to do with maybe some of the management changes over time. But like, there's some other examples like Anduril, right? Like Anduril could have very well just said, we're going to service all of the government contractors. And instead they decided to acquire an enormous amount of government contractors. They became government contractors and earned the contracts themselves. I think that like it'd just be a much less interesting set of companies that and I think that like as an industry, we should evaluate what we're doing. And there's a big difference between building like a new type of institution from the ground up, where you capture 100% of the value versus trying to sell like software to everyone in the industry. And that's not to say that selling software is a bad business or isn't what people should do. But like in any industry that like you don't think very much about because it's just the way it works, like mortgage loans, right? Like I don't know that much about the way mortgages work, but I'm sure that like an AI native mortgage originator would be a great company, right? And because probably the way they work is with like 80s back office and like thousands of people doing kind of repetitive work. And I think just like across the board, like the full stack approach is just more interesting, more exciting. For sure, there's more risk and it's more work, but like I think it'll lead to better companies.
Is there any like challenge to combining this sort of young person cracked engineer culture with like owning a highly regulated business with like where your peers are like stuffy older folks with like undershirts showing? Like is that do you have a suit that you bring out for those people, or how do you approach that?
Yeah, I mean, if you asked me like a year ago if I thought we'd hire a regulator and like have like teams of lawyers and all this stuff, I would have definitely said no. I would have said we're going to have LLMs talking to LLMs, and that's the way the whole company is going to be run. But turns out that life is a little more complicated than that. I think like with the full stack approach, like what people end up doing oftentimes is like from first principles, like you touch the stove like a lot of times and you kind of learn it's hot and learn like, oh, that's why like this industry works. But like you end up cutting out like maybe 20 or 40% of like workflows that are just like huge constraint. And like just by cutting out like 20% of workflows, you can get a business that's maybe 2 or 3 or 5 times better than like the legacy businesses. And in our case, the legacy businesses are worth a couple $100 billion. So like that's really meaningful. So like, I think like what normally ends up happening if you go in with super radical first principles is your stack ends up looking a lot like kind of the legacy stacks, minus a couple like pieces that technology just completely like transforms.
Let's talk about that for a sec, because when I started my career, I've been covering startups since I was like
Mm-hmm.
19, too long ago now,
Mm-hmm.
well over 10 years ago. And early on, there were all these exciting new startups like Lemonade,
Mm-hmm.
Next Insurance, Root Insurance, that claimed they were like a whole new paradigm shift in insurance, and they
Mm-hmm.
SPAC'd, and I guess like some of them are still public companies, but it feels like their best days are past them.
Mm-hmm.
Where did they just kind of advance the ball for you that you can now take it to the next level, or did they come up short in some way, really realizing like the opportunity in insurance?
Yeah, so I think the previous generations of insurance companies kind of fit into two categories, broadly speaking. One is brokers, agents, and MGAs. They're all kind of the same thing, but what they do is they resell a like carrier's policy, and carriers are these regulated entities that can actually write their own policies. So an example of that would be like Next, which you gave, or Vouch is one that's still around. And that's not to say they're bad companies. I think Vouch is worth over $1 billion. Next sold for I think $3 or $4 billion. So they're not, but they're just not that inspiring because what they do is they take a carrier's policies, they package it to some vertical that like the carrier doesn't have salespeople for. They jack the price a little bit, and then they sell that product. They have no control over their product. They have no control over their margins. Um, Oftentimes, what they do and why they're tech companies is because they like have a website instead of like needing to call someone on the phone. But like I think that if you're selling someone else's product, your chances are your company is not going to become that important, and that's a good rule of thumb. Lemonade's kind of in that category too. They have a carrier in one state, but they front in all 50 states, meaning they sell another carrier's policies. The other category of insurance companies I think we saw that are more interesting and were more exciting were companies that like by and large pitched underwriting improvement. So they'd go into these verticals, like Root's an example. They'd go into these verticals where there's like 2% profit margin normally, and they'd say, hey, we're gonna like use technology to like make it so we have 5% margin instead of 2% margin. And by and large, what ended up happening is they had really bad adverse selection, and instead they had like negative 5% margin or something, and didn't do so well. Um, what we do is a little different in that we choose to go into very like high margin sectors. Like we go into like our starting sector is about 80% gross margins. We like do agenic like integrations with channel partners to distribute all of our products. Like our the people that are actually like getting insured in the end don't even really know that much about us. Like we're an embedded product. We're a financial infrastructure company, and like we really focus kind of on going like up the vertical stack, like at the reinsurance and carrier level, where like these automations are really meaningful. And a normal insurance carrier might employ 50, 60, 70,000 people that are kind of doing the task to run the company. In our case, we have engineers doing it, so it's kind of a fixed head count regardless of how much of the product we're selling. So like I think like it's just a bit of difference. Kind of like how like all of the neobanks or expense management companies didn't really work before there were companies like Column that actually like became infrastructure providers themselves.
Yeah, Column's an interesting company. If anyone is curious how they operate, and they're a lot bigger than people realize, definitely subscribe to Upstarts. It's free to subscribe. We may or may not have something cooking with Column in the next few weeks. I'm curious, when you think about this moment for your business with Corgi, could you have done this without Gen AI and sort of the current AI craze? Does that supercharge the ability to grow? Because it seems like a lot of your innovation is just like your risk appetite and your willingness to kind of play up and down the vertical here. That maybe could have been done without agents, but I'm sure the agents help.
I think just because insurance is a business that consists of like language, it wouldn't have been possible without agents. Even like a lot of the things we like are now doing that we said we were going to do when we like first started in late 2023, like the tech wasn't there yet and is kind of getting there now. So like I think in our vertical in particular, we couldn't have done it before like the Gen AI craze. With that said, I think there's a lot of full stack like AI or technology companies that are possible that don't necessarily require require like as much Gen AI. But I think just because insurance is like in particular like an industry where we are interpreting language like as our service that we provide, is something that really does require like the current like technology advancements.
The thing I want to kind of circle back to at the end here is for people who are sort of trying to get their brand out there a bit, let alone get their brand out there without divulging a lot of details on how their business works, which you guys have pulled off at Corgi. How intentional has been the press and sort of viral social media moments you guys have gotten? How much is that sort of incidental, and what have been the takeaways from sort of Corgi's virality, which if you guys don't know what I'm talking about, you can go check out their LinkedIn posts about their dog or their mattresses or their arguments on Hacker News, Reddit. Like you guys are somehow in this convo. Was that deliberate or like what's the takeaway?
It was not very deliberate, so I wish I could give better advice here, but are people just like posting and some of them and
Is there something about like employees feeling empowered to just like share a lot of details or like, you know, at least about the culture of the company?
yeah, I think the fact that we like don't clamp down a lot, and then like within the startup community, at least in San Francisco, and particularly the YC community, we're pretty well known for like our culture. So like we always get reporters reaching out to us, and we always say no to them. We said yes to the Wall Street Journal recently, and that was kind of the only press that we've actually done.
If you guys saw, this was the viral article about how founders don't drink, they're celibate, they work all the time, and they get more done, right?
yeah. So I don't know. I think like if you're doing something interesting, people will just kind of come. In our case, like I think a lot of the times because we don't say anything publicly about the actual work that we're doing, kind of our culture is like pretty well known. And I do find it's a good draw for candidates, like people that want to like do hard work, come to us, and people that like want to do hard work tend to want to do important things, and they tend to kind of question like, oh, if they're working very hard, they must be working on something pretty important. So I find it really helps with recruiting more than anything else.
Yeah, I was gonna say from the outside, you could almost think maybe it was intentional because if you're not gonna, for competitive reasons, share your revenue or like how fast you're growing, and there's so many fast-growing AI startups, especially here in the Bay Area, then having a culture and like an office vibe that people can really kind of pick up on easily has to kind of help approximate that momentum, right? Like it's a proxy for you in a way.
Yeah. I mean, I hate it when people like use headcount as like a metric for success. I think revenue is a great headcount or is a great metric for success. But like, I just can't imagine like if you actually give it your all and you actually like just put in the work for 7 days a week for like a couple years, it's hard to imagine that like you won't eventually find something that works and something that's meaningful. Whether that's like the next Facebook or not is maybe up to factors beyond most people's control. But like I think the world would be a better place if a lot of young people just put in the work, chose to work 7-day weeks, and tried to build a big company.
Well, I know one of your colleagues offers tours on social to come meet Trudy the Corgi and see this in action. So I hope to take you guys up on that soon. But I know you're probably moving offices soon. So
yeah.
Cool. Well, thank you all. Check out Corgi Insurance, and for more startup stories, check out my startup, Upstarts Media, which is writing about crazy cool startups like Corgi. And thank you all for the time. Thanks, Nico.
Thank you.